All right, guys, we're back at it. Another day, another dollar. We're going to go straight into this. I'm going to do some quick news updates that I've seen in the last, 10, 20 hours, last 24 hours. Sometimes I go through this cycle. Kind of want to show you guys how to do this with some of the best research reports on a quarterly basis, which I think are pretty interesting. And then you'll see how Goldman and JP Morgan kind of get an idea of what's going on in the market and more importantly, what they tell their investors. So that's probably the biggest takeaway that I've seen. Like, all right, hey, these are the things that we're sending our billion-dollar clients that have so much money with us, etc. So let's start up with I mentioned Palo Alto the other day. Obviously, this is the behemoth. They were bigger than CrowdStrike, as I mentioned, so they're coming in pretty strong at the current moment lifting guidance. Companies have been crazy with their sales team right now, and it looks like they're expanding through acquisitions, which I haven't heard of this business, cybersecurity, but 195 million is a big boy purchase, even for a $37 billion business. So let's see, moving up 7%, pretty promising. This revenue jump is gigantic, 26% year over year in the quarter. So that's in the last, so they ended January 31st fiscal cycle, and net income is pretty high. So that's a flip. It went from negative 93 million to a positive 84 million. Big jump for a business like this. So focused on profitable growth, of course. See if they have anything else that's promising. Pushing its earning guidance. That's a big jump as well from 3.5 to $4. I always pay attention to what management's saying. I'm not really interested in what analysts say because analysts don't have any stake in the business. They really don't. They just look at it as outsiders. They just kind of are hoping that the business does what they expected. But the problem with earning estimates in most cases is that they're estimates to begin with. So the media is trying to hype around some number that's an average or median. And then I don't even remember how they calculate it because it's such an old or poor method of estimating earnings. And then two, they have a spectrum of analysts that provide forecasts and they populate it into Bloomberg. And it could be like the grade A Goldman Sachs saying, we're going to do $4 of guidance this quarter versus like a grade C no name Midwestern investment bank that's like, I don't know, maybe 250. We don't really have any coverage on those companies, so we can't provide any strong guidance. And they take the average of that, and they're like, I think it's like 320, 330. So why don't we just say that's what the earnings are expected to be? The reality is that's a terrible way to do it. There are better methods to do it. First, just do it yourself. And then two, pick an analyst or more preferably pick an investor that knows how to make money. So follow that investor and like, all right, this guy invests heavily in cyber. He knows very much how the industry is moving, whether budgets are going up, whether budgets are going down, uh, how expenses are being viewed within the companies, how M&A is happening in the market, who are the bankers are, how deal flow is happening, who are the actual other investors that you're dealing with, and like what are the counterparty risks of like, all right, people are actually buying more shares, whether it could be an index that's passive or active investor that might be like an activist, like an L8 management or third point. So let's see. So that's why I pay attention to what management's saying versus any of these other analysts. And I think, yeah, so in this case, finance chief Deepak says he expects income to maintain revenue guidance. All right. Even though customers have delayed or canceled projects, that's something to look forward to if revenue drops. So if something bad happens in the economy, this company will probably lose, 3 to 5% of revenue right off the top because people will cut their budgets. Resilience, let's see. Wow, so $3 billion of acquisitions up to date. Interesting. Cool update. That's good to know. All right. This company is a major, Leidos is a major government IT contractor. They do, like, you've seen them. If you've ever been on an airport or anything like that, you've definitely seen this company and its business. What do they do? The X-ray machines in all of the major airports in the United States, probably across the world, because they basically handle all these federal government contracts. So if you walk in through a machine and you used to be like, you know, take all your stuff from your pocket and like put your suitcase in, this is the company that would do this, and they actually do a great job of advancing this technology because those security machines have become more convenient to use every year. All right, let's check out what record earnings revenue again. Very common right now in IT services. Book to bill ratio is their because they're basically a consulting firm, so contracts like this are important. So book to bill ratio, um, one is fine, but it should be higher. So it's crazy. 35 billion in backlog, 23 billion submitted. They're hiring 11,000. This is pretty big. I didn't realize how many employees they had. All the popular buzzwords is are their focus. All right, so these are positive signs. Revenue's up 5%. Margins are not good. Well, this is flat. This is a bigger drop than expected. But it looks like they made out well for even though they were turning around in the fourth quarter. This is probably the big turnaround right here, non-diluted EPS and the revenue. That's promising. Now, here we go. So, defense, civil, and health. This is probably public sector stuff, and this is probably, military. I think they do something with Medicare, but I don't remember. So, this is also a positive jump. This is huge. Civil, and this is expected. This is okay. Interesting. The spending is decreasing because we sent so much money to Ukraine, so I guess they're not doing anything on that side. Or maybe the spending has a gap. The cash flow is insane. That's almost $1 billion right there. And days of sale outstanding 58 days. So like that's the amount of that's their turnaround. So that's pretty good in terms of getting payment into the company. Large buybacks, lot more money returned to shareholders. This number is lower than this is all right. So balance sheet ratios, these are pretty important to pay attention to get an understanding of the level of leverage they have and the debt versus their free cash flow. So $1 billion. So they can service this. You can see this by their leverage. They almost have $1 billion in free cash and only about 150 to 200 million in capex right here. 300 million, so 100 million a quarter. They have no problem servicing this debt, which is great. And they're a government business, so the revenue is pretty much going to stay consistent. So this is impressive. This was just on the upper end. All right, so that was pretty good overall. Business is decent. It's a slow cash flow compounder. Let's see what else is going on. 14, $18 billion, $19 billion business, 16% ROE. So this is expected in terms of operating profit margins. Yeah. So we just saw this number. We just saw this number. That's straight from the report. That is fine. Book value per share is $30, so 3 times book. Pretty solid business overall. 45,000 employees right here. CEO is crushing it. He had $10 million pay package last year. The entire C-suite's $1 million earning power. Here we go to the products. So defense, intelligence, cyberspace right here. You can see this is all military right here. Department of Defense. Civil is air navigation. Federal aviation. Oh, okay, got it. This is a big piece of their business. I think they bought it from SAIC or someone else. Um, yeah, I think it was SAIC. They did a major, like, $6 billion deal with either SAIC or L3 Harris. Either way. Oh, that's an NASA right there. Yeah. Cool, cool. Keep an eye on that. Next up are the quarterly economic reports. I think these are pretty neat. I go through them several times a year, especially Goldman has a great one. It's called Top of Mind. You can just type it into Google. They share it publicly with everybody. And it's really easy to like go through and understand what's going on in the economics of the business. So obviously growth or inflation are big, big questions. I'll just breeze through some of these. I didn't highlight anything because they're about, this one's 28, 38 pages and JP Morgan's like 100. So it's good to know that Jan here, I've been following him for years. He's a top economist. He's probably the most, like, in terms of predictions, he's been pretty accurate. You can check it out on Bloomberg. And looks like David Rubenstein from Carlisle is predicting an increase. I think they did an interview with him, so that's good to know. He runs a huge private equity firm. See if they got any interesting. I think they're on the money with this, so they're probably accurate. Remember, these guys are the best on the street, so if they mention anything, they probably have done more work, put in more effort. They're figuring out what's good because they got probably $1 trillion of assets under Goldman Sachs asset management that needs to be managed, and people read this. They only release like 2, 3 reports publicly, but they probably release way more internally for the private client teams. Less of a drag on policy tightening. Let's see. Yeah, this is cool. Soft landings. That's been pretty much the premise. Falls downs, dawns. Never seen that term before. Okay. Of course. See, it just means a sunset, maybe. That's interesting. Okay, Alan Greenspan. Recession does appear to be the most likely outcome at the current point. That was December, probably too early. The January numbers right now seem like they're shifting. So higher, not lower probability. Harvard guys are all over. Guggenheim. I don't know. These jobs reports look just fine. the tightening has happened enough. I did read an interesting piece that was like, if Russia does something with nuclear or does something aggressive, then maybe China will, and if China supports them, the US won't even have the level of funding necessary to continue to finance an aggressive war. So, and US has been pretty aggressive with some of the current stance in the Ukrainian like support. So if things kind of go over one board, that could really cause some additional stress that we don't really need because this is a proxy war. It's not something we're like directly involved in. It's an indirect battle. Growth and real disposable. Interesting. Okay. Okay. They interviewed him. This is a good book. I've heard. This is a new one. It's all of his interviews basically. Concerned with you. More optimistic. Yeah. The facts change. I change my mind. Good quote. This is interesting. So like unions have dropped 25 to 10% in 50 years. Big change. Biggest change in the component is like now you kind of have equity compensation or you get other ways to make money versus the union. Doesn't see a resurgence in inflation. 3%. All right. This guy's probably worth following or listening to as well. David Costin. Worse, not better. Summary. All right. This is pretty good. This is pretty much average. JP Morgan ones are interesting because they do a lot more data. This is a very in-depth, this is an asset management business. And if you want to like the daily and weekly, monthly updates, you got to be a client. But they release publicly their quarterly updates, which are great. The US economy is teetering on the edge. This was in December, so things have changed in the last almost 2 months. Cooling, jobs have been fine. Continues to be challenged by slow growth. Peaked. That seems to be common. I'll go into these graphs. These are pretty good. Economic momentum has also slowed, nearing the end of this tightening cycle. Okay, let's go. Overall, how do you feel about investing? Got it. All right. So I got December 31st and let's see. Let's see. All right. Let's do this. I don't know how they share this with the clients. This is kind of crazy. Like, there's too much information going on around here, but they're doing it by return, high to low return profiles. So this is interesting. Emerging markets got crushed in 2008, but they've done well this year. Or no, that's average. So they still got crushed this year. Okay, so I would not invest in those emerging markets. Looks like REITs actually did really well in 2021. Commodities crushed it. So consumption, that's this is kind of cool. So you can see the components. If you don't look at GDP and by either the provider of it, I forget which entity it is, then you can like here they go. They just break it down, so you don't have to like think about okay, this is how many trillions of dollars it is. So real unemployment, 6%, wage growth 4%. That's actually pretty good. in terms of recent trends, but that's because there's a tightening job and labor market that they have to do that, which is great. So this is a very positive trend in terms of income, earnings power. EPS is growing over 20 years. So this was natural because of the market conditions. Oh shit. Okay. CPI 8%. US dollar. Fed and interest rates. Let's see. You got any good information? Not this one. All right, let's see if there's anything. Maybe the economy correlations. This is pretty good. You can pull this up yourself as well. Um, am.jpmorgan.com and then pull up the content. Probably go through half of this. I don't think there's going to be anything meaningful that I don't already know or haven't read about. This is interesting. Profit margins. That drop. Session, price, wage, earnings. They do operating leverage by sector. So this is an interesting stat if you know about this. So this is determines like your compares your revenue potential and your operating income in comparison to your fixed cost. You want to have a high degree of operating leverage. So companies that have high fixed assets, high fixed costs, energy is definitely one. Pharmaceuticals usually is because of R&D, but this is probably all of healthcare. Um, like real estate has no operating leverage. Depending on the industrials, they don't have much. Communication, depending on what it is, it might be media, usually does, but maybe not this collective one. But anything with high operating leverage, like banking, insurance, don't know what's consistent of this. Consisting of materials here. Consumer staples does well, depending on the type of software, technology does well. See small cap took a hit in most cases, but look at this. IT crushed it. So Leidos, which is the company we just covered at the beginning, was IT, so that's big. Percent of unprofitable companies, this is like the most concerning trend for me because basically every unprofitable company that's not producing free cash flow is a net negative, meaning customers are not paying high enough price for a company to be in existence, and investors have to fund the gap, especially the VCs, and the public markets just destroy any valuations that are not, justified. Housing inventory is the lowest it's ever been. Same with single family. Rental vacancy is pretty low. Damn, Miami is really winning here. Federal budget. This is a big problem for sure. So this must be tax revenue right here. The income, borrowing, substantial, but it's a problem. Social, okay. The spending budget is crazy because this one is, these two right here are over almost 50%. They are toughest to cut. I don't know which one of these are interests. This one might be right here and other. This is expected. It's just cool to see consumer balance sheets, kind of see where their debt and service ratios are and whatnot. Consumer confidence is the lowest. We saw this. All right. So I don't see anything else. Like energy transition. Oh, this is interesting. So obviously the trend is to go towards renewable. The challenge is storage. So we are definitely making a lot of ground progress here. And the cost of energy, this is the most important part. So you got two pieces, you got energy, the cost of energy, and then the storage of power. So like when you convert energy to power, you'd be like, that's probably the bottleneck we're in. Although I don't know enough about this area, but when you got all this cost going down, nuclear is the only one that's increased. I wonder why that is. Maybe it's just regulatory hurdles. And coal is up there. Crazy, crazy. This is insane too. Balaji's got a pretty interesting thing about this. He says like he doesn't think interest rates will ever go up beyond like a couple of points. I tend to agree with him that it won't go over that 5% range. Eventually, the market will be forced again to cut down the rates as it has historically. You can see they've trended down this way for so many now decades because we don't have the power anymore to turn back it around. Rates, inflation. All right, we know most of this stuff. I've started looking at fixed income again because the rates are above zero. So once the risk-free rate goes up, all the equity valuations start changing accordingly because everybody's financing is based on that rate. And as long as the dollar is a reserve currency, we'll continue to see that. All right, not interested in international, just too much noise. All right, so that'll wrap it up for today. Um, Tune in for the next one. Hit subscribe. We'll catch up. If you got any questions, just comment. I'll respond in YouTube or Twitter wherever I get a chance. So follow up